Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, everyone. Ira Epstein of Linn & Associates with your metals market update, and this is for Monday, the 6th of March, 2017. Okay, let's just get right into this. If you can see this, most of the metals came down. The silver's gaining on the gold again, but they're all looking on the poor side. They're building in the Fed rate hike of March. That's what I think you're dealing with right now. And as you understand that, the first one comes, then right behind it is probably the June hike. That's my own guess as to when the next one would be, assuming, and the word is assuming, our president doesn't get us into something that's really crazy going on in our economy, a war, or some other event that's outside of the market. You never know. You know, North Korea today, again, shot off 4 missiles. Now, I understand they weren't ICBMs, but they're still pretty important missiles. Gold at first was up on that news and some other things and just gave it all up. Gold still acts like a commodity that's going to feel some pressure from the dollar when and if the Fed begins this policy of raising the rates. We're looking at a weekly chart that still is bullish until you take out 12-17-30. When that is taken out, and if it is taken out, what it does is it breaks this pattern of higher lows and higher highs and could set the market back down into the combination of the 1203, 1195 average of the green line is the 100-week moving average of closes. The red is the 18-week. When we look at an area chart of just closing prices, because sometimes you want to get away from the highs and the lows of the day and it gives you an idea. I'm going to leave up the word up thrust today, but guess what I'm going to do tomorrow? You know I'm going to take that off and the market has come down, but I want to show why it came down. If we come over like this, it's still in and up, still in and up, right? That is through Thursday. Friday comes down on the daily chart. But because we were doing weekly charts, I didn't update for you, so I want you to see what that is. So I'm going to move this to a down thrust as the market is working with that. On the April gold bar chart, you can see how the market's starting to slip slide, getting under these important lows. And when I put the swing line on, you can see it right here. 1223 is under that low. You still got the higher high. But if you're going to have a true trend is made up of a series of higher lows and higher highs, or lower highs and lower lows, depending on you're looking at an uptrend or a downtrend. No trend has this pattern, lower and low, higher high. So this next thing I do is I step and I look to see where's the bias of the market. And to find the bias, I plot for you here 2 key moving averages, in my opinion at least. The 100-day moving average of closes, which is the longer one, and the 18. Now don't get me wrong. Some people use a 20-day, some people use a 21. Whatever makes it work for you. I can't help that. I prefer this. And in looking at this, you're stuck between the 100 and the 18. That seems to be what the market's doing right now. When I had Bollinger Bands, you had gotten recently to the top band. What's the odds of staying over a Bollinger Band? 5% of the time. When the market corrects, one of the areas it might go to is what I call that line in the sand, the 18-day average of closes. And if we come back to it, you came right to it, you stopped, the next day you probed it again, and that's when the market let go. So it's acting classic as to what it's doing, which isn't trending. It's just meandering around. Then you get to momentum, which is getting quickly oversold. You have a 27 reading. My own take on slow stochastics, which is different from the author George Linn when he created it, is any reading under 30 is oversold, over 70 overbought. When I come to the gold ETF, you've got the same pattern. You had the higher high into the Bollinger Band, and in this case here, if we come to this low, it was 116.44, just missing the lower Bollinger Band of 116.37. Should it come down to it tomorrow, it even has support at 115.67. But there's certainly no reason on that chart to be looking bullish or bearish just yet. The gold miners have been the sickness, and I know I have been consistent saying that to you. Now, there's a big conference going on in Canada, and they're all juiced up talking about how much better silver is going to be or gold's going to be, but that's what mining conferences are about. This market's leaking itself away, and it's got a problem. The gold-silver ratio had a nice correction from 67.61 to 69.47. I call that an upthrust. It took out this high, and now it's backing off. So now the question is, does it get back under this number, or can it build and then gold starts gaining on silver? Right now, I can't tell. The silver market itself has a pattern like gold of a higher high and a lower low. What do you do with that? The bias is down because you're under the 18-day average, and you're instantly in oversold territory. The silver ETF, which is SLV, higher high, lower low, nothing to do there. Sideways action now in the Bollinger Bands in an oversold condition. In other words, on all these metals so far, if you're trying to trade them, God bless you, but it's not an easy task because they're not trending, including copper, which is now very oversold with a lower low, a higher high. The bias in the metals, down. All of them are under the 18-day average of closes. The platinum joined the parade today all the way down, and magically it comes back at the end of the day and finishes right up by that lower Bollinger Band. Very oversold. If it slides through here, look for 966.5, about $14 lower as it tries to get to the 100-day average. A sign that the market's really overdone it would be taking out today's high. Why? Because it's an outside day down, and if you're going to create what I call a bear trap, you take that day's high out, then the market often, not always, makes a run for one of the key moving averages, be it the 18 or the 100, the closest of what's above it. In this case would be the 18. In the palladium market, you've got a marketplace that's got a higher high and lower low. There's nothing there. Momentum is flat. It's boring in the metals if you're trying to trade them. Now, the dollar index is still in overbought territory. You do see this. 70 readings. It got up to the upper Bollinger Band. It does have a bull pattern, higher lows and higher highs. The support's 101.15, let's call it. Just missed it today on the low break, but do you buy the overbought condition? That becomes the issue with the market. So I put it all together, and there are times when you just do this. You put your hands in your pocket, and you wait for the opportunities to come your way. You know what's great about trading? Analyzing markets, reading, there's always something new to do. It's not that one moment. And that brings me to the platinum gold spread that's in the current issue of Modern Trader. Now, I know a lot of you like to trade metal against metal. They even talk about symmetric patterns and like. But the April issue, this has got all that. And of course, you get the daily market focus. Now, if you go to Modern Trader by themselves on the website, and go do it. Go to Futures Magazine. Go to any of those names. You're going to pay about $79.95 for the publication. You get it free from us. It's an email is how you're going to get it from us with their permission. They're the ones that are going to send it out. All these stories, you're going to talk options, you're going to talk earnings, you're going to talk ETFs, the spin-offs that go on. One great article after the other. Why do I say great? I say great because I think it's great reading. I don't agree with every author. There are some of them I think, what can I tell you? But the magazine I love because you get ideas, all right? So you're going to get the combination. Just either give us a call, go to our website. You'll see a carousel of free offers for the magazine. You can click right on up here if you want. You can, with that, if you're watching me on YouTube, our form will appear. Or under us on other websites, it'll say, click here, and we'll get it right to you. I'm Ira. You have a good day, and I'll talk to you all tomorrow.